All right, all right. We are here. Good morning, good evening, good afternoon. Hey, Lachelle. Hopefully, everyone's doing well. Let's give it a moment. Let's give it a moment. We will be getting started today. Super excited, super pumped up to be with you guys. Let me see. Let me make sure that we are good to go. All right. Today's lovely Sunday setups. All right, we're here. Hey, what's up, everybody? Let's give it a second. I know we got some last minute individuals tuning in. So let's give it a second. Oh man. Let's see. Awesome. Family, I appreciate you guys being here. You're gonna notice today, this lovely Sunday setup. So what we're gonna do is we're gonna be discussing the markets. We're gonna be discussing getting our minds, getting ourselves mentally prepared. You know, first and foremost, hold up. Let me go grab mine. Right? Like, I want to make sure that each and every one is prepared for this journey, prepared to elevate, right? A lot of the times people tap into this opportunity and they're just stagnant. They're not putting the time, they're not putting in the effort. And what I want to show you guys and really keep staying consistent with is inside Elevated FX. This platform has everything you need, from trade alerts and analysis, educators providing the education, live sessions for you to tune into so you can maximize your experience and even leverage proper funding to get you guys to that next level that's going to bridge the gap. You see, a lot of the times, and this is what a lot of people don't understand, is that what has taken, you know, myself 6-7 years, what has taken are the educators 5-6 years. You know, combined we have, I can easily over 30 years of knowledge in this space. We want to make sure to compress it, help you guys elevate, so now you're not going through the hardships of lacking capital. You know what I'm saying? You see, when you have this skill set, when you have these tools in place that we're going to review tonight, you're going to be able to focus in and hone in on your growth, your experience, right? And that's one thing I want to make sure is that for the people who are coming in, everyone's at a different standpoint. Whether if you're just getting started, whether if you've been here for a little bit, a lot of people are definitely going step by step, and that's where we want to move, right? So the first thing here, I want to make sure everyone has one. The success manual, right? Everybody should have your 30-day manual, and this is actually found in the back office. And with our 30-day manual, this is what's going to allow us to really start identifying and holding ourselves accountable, whether if it's a 90-day goal, whether if it's a 30-day goal, by being able to identify where you're currently at and then evaluate this process that you do throughout these 30 days. It really helps you see what's working, see what's not working, right? Let's be honest. When you go into this success manual here, I'll probably, let me over here. The first thing we're going to start and being able to do is start to identify and conquer time, you know, setting a schedule that works for us. And throughout this experience, I've always had to evaluate that process of identifying the right time availability. You see, the first thing you want to be able to do when we're trading is identify a schedule that works for you, right? You see, one thing I've realized is I've been able to trade at every time of the day, right? When I was working a 9 to 5, a 2 to 10, when I was working any type of hour of the day. And no matter what, I've realized that one thing that's going to help you maximize your experience is working on something that works for your schedule currently, right? Because we're not here to help you. We're not here to tell you, oh, quit working right now. No, we're here to give you the skill sets to open up these opportunities, right? So that makes the decision, right? So whether if you're working 9 to 5, there's always going to be an opportunity for you to tap into this market, master your time, and really master the currency. I'm going to say that one more time. Master the currency so you can dominate the pairs, right? One thing you're going to notice is no matter the time of day that I've been trading, I've had success with all of these different types of markets, right? And one thing that's really honed in and I've realized is when I evaluate my trades, right? When I evaluate my trades, I'm seeing what's working, what's not working. And one of the main things is this right here. Trading the right time, trading the right pair. So one thing you're going to notice is, for example, between already 4 p.m. when New York session is starting to close and I'm already starting to get out of my trades because the liquidity is starting to flow down, right? As the market as the markets are transitioning, sometimes you see a lot of manipulation in brokers. So you see spikes. You see the market literally by the time sometimes you're in trades at 4 p.m., the market's just consolidating and it makes no sense because by the time that it finally starts moving, it's 7, it's 8 p.m., which allows you to obviously see the opportunity start to flow, right? So one thing I want to make sure that you're doing from the start, no matter your experience, is putting a schedule that works for you. Identifying the currency pairs that are going to help you maximize, right? Because I can tell you, when I'm trading at 9 a.m. Eastern, I'm already looking at my USD, I'm looking at my CAD, right? And it breaks down to the schedule. If I'm trading at, this is all Eastern. If I'm trading at 9 a.m., I got my CAD, I got my USD. I know that already at 9 a.m., London session is already flowing. So some of my GBPs made good moves. So if they do retrace, I might be able to snipe, 30, 40 pips. That's why you see some of these GBPs in there because we're coming from that London. Is being able to understand that throughout the day, we got the currency pairs that are moving. We got specific sessions that are pushing these pairs. And now it's your opportunity to catch those pips. And now there's no excuse that, I don't have capital, because now there's proper solutions in place that's allocated through that, right? So set your goals, set and identify everything from the start so you can see what's working and what's not working, right? Now, I want to move into that because the next thing we have is our resources. Everybody should have access to TradingView, right? This is a platform that, it's so user-friendly. It's accessible on your mobile device. And what's powerful behind that is when we go into our charts, we're going to start utilizing all of the different tools we have inside Elevated FX, starting with our pullback pips indicator, right? So one thing I want you guys to do is, if you don't have access to it, go into your back office, right? Put in your TradingView credentials in there, just your username, so you can get access. Once you get access, all you have to do is go to indicators. You could type in Elevated FX pullback pips, right? For the people who are the first timers, you'll type in Elevated FX pullback pips, right? And you'll see it's right there. I just want you to click it, right? Once you click it, it's going to appear. If you have your credentials put in, you see it already pops up. If you don't, it's going to say, hey, you're unauthorized to use this. Why? Because you got to put in the information. Go to your back office. However, one thing I want you to do is I want you to add it to your favorites, right? It's already in my favorites. That's why it's a star. So what happens is you don't have to go back and type it in over and over again. All you have to do is go into your favorites, bada boom, bada bing, and it's there. Bam, right? So what is this tool? And for starters, I'm going to tell you, this simplifies everything, right? When you receive an Enigma Confluence, right? The Enigma alert is giving me an analysis, a 3-to-1, reward to risk trade setup. Now I'm able to use this tool in conjunction Confluence with it to maximize my opportunity, right? So one thing I want to make sure you guys do is go into your settings. Come on, why doesn't want? Give me 1 second. Oh, there you go. We're giving out too much sauce. Let's let it load up. Hey, Joseph. What's up, brother? All right, so give me 1 second, family. In the meantime, I want you guys to go to myfxbook.com, right? Let's let that load up, they're not going to stop us from providing the sauce tonight, right? So we got MyFX Book, we got Forex Factory. TradingView is a technical tool. So as you already know, there's two ways to analyze the market based on what's happening fundamentally, based on what's happening technically, right? As you grow your skill set, you start to learn about different patterns. You're looking at candles. This is all technical play. Now, aside from the technical, we have fundamental. Now, already, if you guys noticed on the chart, if you're trading at the right time in the right place, you're already on a good fundamental note because you're trading the right session, the right pair. Now, aside from trading the right pair in the right session at the right time, another factor you're going to have on your fundamentals is news events. Now, news is when you notice that the market might spike up, it might spike down. And you'll notice with news, there's a lot of volatility. So what I want you guys to do is go to myfxbook.com, go to forexfactory.com. You know, there's a lot of different resources out there, CNBC. Like there's so many fundamental things out there, but let's just keep it simple. MyFX Book, Forex Factory. When you go into the economic calendar, it's already going to tell you which currency pairs are going to get impacted and the type of impact it's going to have on that pair, right? So for example, Swiss franc, anything that has a Swiss franc is going to have an impact, right? Swiss JPY, Euro Swiss, AUD Swiss. So whatever happens with that Swiss pair, whether if it's good for the currency or bad for the currency, will have impact on that chart at that time when they send out these reports, right? Now you're going to notice as you're trading, there's going to be some news events that happen each and every month. NFP, you know, you'll have specific news events that have specific, you know, strong impact. Now, one thing I'll tell you guys is, let's keep it honest. If there's volatility, why would he be in the market? Why would you wait until this time to look at the volatility and try to risk your account to identify, oh man, is it going to go up or down? There's people who do that, right? But I don't. What I identify is if I know that there's news going on, I'm going to stay away from that market right at that time. I know that as the news report comes out, I give it about an hour, 30 minutes to an hour for the market to get that back into rotation. So for example, a news event comes out, boom, it's going to give you the numbers. It's going to obviously have impact on the chart. It might go up, it might go down. What the market's going to do is create spikes. When you see news events, after it happens, then you're able to then continue trading, right? So I don't want to trade during that time. Give it an hour before, give it an hour after, avoid that time period, right? Simple. You know, you got so many other pairs that you can trade. And you'll be able to identify this throughout the week, which currency pair, the impact, and when it's going down. It's simple. Don't overcomplicate it, right? Now let's go to tradingview.com. See if this bad boy wants to load up for us. I'm doing well. You know, I've realized that these last, I think it's been about 45 days, 45, 46 days. I've put together this journey to really help myself and hone in on getting funded and showing people that it can be done just utilizing all of these amazing resources we have, right? And a lot of people, if you just stick to a consistent plan, you'll definitely get there. So I want to it's just sauce, right? So TradingView, everybody should have a TradingView. Create your account, use it on your mobile device. It's so much easier, right? Give me 1 second. Let me just show you guys. All right, get the app on TradingView. Like I thought MetaTrader 4 was cool. TradingView is even better because this exact indicator, you'll have it on your TradingView. And you'll do the same exact things you're doing. That's why it's like zero excuses, right? I got my pullback pips indicator on there. It tells me if I'm bearish, if I'm bullish, right? So with this tool, I want to show you guys a few different things you can do with it. the first thing you're going to have is your bias, right? Your bias helping you identify, hey, am I bearish? Am I bullish? And the great thing about this is now by having a bias, you're able to put everything else together. So for example, let's go into our settings. And the first thing we're going to be able to do is let's just overview it. We have our inputs. We have our style, visibility. You can ignore visibility. We don't need it. When you go into style, the only thing you need here is if you want to just deal with your structure levels, great. But if you want to make sure that you have a bias, your pullback, there it is, right? Some charts you might just like identifying the structure and trading structure. Other times that pullback pips bias is going to help kick in so you just don't sleep on what's happening. Now, the great thing is if you're trading as an intraday trader, because most of the time you got to ask yourself, what type of trader am I? Am I a scalper? Am I a short-term trader? Am I looking to get in the market, minimize my risk, scalp, get out of the market within 5, 10, 20 minutes, right? Scalper. Am I an intraday trader? Someone who says, you know what? I'm going to be trading, looking to trade, putting my time and efforts into these next 6, 7 hours each and every day, looking for an opportunity, catch my 20 to 50 pips, you know? I'm not looking to hold trades over 3 days because I'm an intraday trader. I'm looking at these session plays that are coming in, right? Or are you more of a swing trader? You're holding your trades, you know, a week, 2 weeks, 3 weeks, a month, right? So me personally, I've realized a lot of people are coming into that scalping intraday, but mainly intraday. When you're looking at your 15-minute time frame, right? For your 15-minute time frame, and your 30-minute time frame to place your trades. So the key thing is if you're looking at these time frames to get in the market, you need to at least have your bias, right? Your overview of what's happening on the market, one time frame above it, the hour, the 2 hour, right? So you're going to notice when you have it on the 1 hour and you're trading on the 30-minute, when you have it on the 1 hour and you're trading on your 15-minute, you see how simple it is when you know what type of bias you're looking for in the market, right? So this allows you now to see things on a whole different level. Because if Enigma sends out an alert and says, hey, buy, boom, you could add that confluence to it. Realize that it's powerful, powerful stuff, right? So let's just review the pullback pips real quick because you're going to notice you have your bias and then you have your levels of structure. Your levels of structure can help you in various ways of identifying your targets, right? Like, for example, if this is my green, my bullish opportunity, and I'm looking to buy this market, I know I could identify structure, and price to take this market to the upside. I know that I could identify my green level of structure as a supportive boundary to kick back this bad boy to the upside, right? So already the key thing that you'll be able to do from there is add your other confluences of everything you're learning, you know, pullbacks, retracements, zones, right? So let's just do some very basic back play motion so you can see what happens on both ends of it, right? When we're looking to buy, when we're looking to sell. Like, for example, this is EJ. We trade EJ during what? The yen session, the euro session. So a few key things we can do is start having some zones. We can bring out our Fibonacci tool, which helps us see, hey, when's a good pullback opportunity? All right, just some basic stuff. So we got opportunities to get in here, here, here. And if it wants to fake out, boom. All right, just some basic stuff. As we're identifying these moves that the market's doing, I want you to look at what's happening to the structure. It's getting held, right? We're identifying levels of interest, seeing as this market wants to marinate to the upside, right? As it started breaking that structure, you're starting to see, hey, the motion is kicking in. So if you're looking at this market and you're trying to take it to the upside, right? What did it do here? Hey, it retraced to, I believe it was either the 50 at this level. So you're kicking it up to your 2.0. You're seeing that if this market's going to keep going up, what's the key thing you want to start doing? Finding pullbacks to start breaking this bad boy, taking it to the upside, right? Whether if that's on your 15-minute, your 30-minute. right? This break is going to be great right here. So as you can see, as it's breaking, you know, you can find these opportunities for you to get into this market, minimize your risk, and now maximize your profit into structure, into structure. You're going to notice if this is my trade setup, why am I getting into this market? Well, if it pulls back, this area that was all rejection should be supportive. If it's not, well, guess what? I'm going to get stopped out with the minimal risk, right? I could really do about a 15 pip stop loss if that was the case, making my R to R 6, right? So let's see what happens. We got stopped out in this play. Boom. What does the market decide to do? Breaks through. I'm getting in on this entry, pushing this market to the upside. Same play, minimizing my risk, right? And at these points, you're gonna realize you're gonna lose. I'll be honest, you're gonna lose. But this is the power of being able to backtest, replay. How do I minimize my loss, right? 14, 15 pips. How do I, rather than taking that loss, maybe how could I have gotten in a little bit at these areas to push this market up? Yes, I was able to get in on this break and push this market. It's currently up about 50 pips. You know, how do you manage your trade where your wins are outweighing your losses, but in the meantime, you're still taking partials that's covering these losses so you're not seeing or feeling that stress? You know what I'm saying? And if you're able to do something like that, now you're just looking for the same plays. Hey, I'm bullish. Where can I pull back to continue pushing this market to the upside? If this market is going up, how do I make it risk-free and still be able to trail it where if it wants to continue, our entry is at an optimal level? You know what I'm saying? So those are definitely things that we'll be able to do. Now, I want to make sure, let's see if we can get some bearish action. Here, let's go to the 30-minute. And let me see. Let's see when we get some bearish action. That was crazy. I don't know if you guys saw that, but it's always good. Like when you got your structure is everything. Because what happens when this rejection area is no longer going to be rejection and the market breaks through that bad boy, right? I want you guys to realize what just happened here. The market literally came to this supportive area, right? Showed support, kicked up, broke that rejection. Oh man, imagine the type of play of pushing this market now up into these levels, right? Having your risk under that mess to minimize, right? Crazy, like crazy. Just plain and simple. Oh, okay. So we got a bearish move coming. We see it. Here, let's look now in a bearish case. When you're identifying your setups, it's the same type of thing. Hey, what am I adding into Confluence? What am I looking at? Well, you're trading the right time, you're trading the right pair, you're seeing if the market is trending, all of these little things you've learned, right? You can identify your trend lines, great, right? You can now identify some zones of areas of interest of where I would like to pull back to take this market to the downside. So like, for example, with this Euro JPY, I like it. You see now we're bearish. You see how the market's already in a potential trending state to go down. We're looking for pullbacks to short, right? The same way we're using the structure as targets, we're using them as, now that the market's breaking all of these supportive areas, this is all referenced now as a rejection to take us down. How far down? Well, we got structure areas all the way down. So I always use structure to help you identify your entry opportunity, but also your target plays. So let's look at Euro JPY. All right, let's look at this situation right here. I like that one. Market literally already makes its move. It hits this structure, pulls back. I'm interested to see, does it want to come back up one more time off of this? Or was this that rejection we were looking for, right? So far, that right there is the 382. So if that's the rejection we need, great. We could really look at minimizing this bad boy and saying, oh, well, our stop loss could be right above it, 20 pips, because that's the rejection off of that zone. You see how it hit this, pulled back, rejection now. Let's take it down, right? Right, the market's consolidating. It's doing what it does. But as it's moving, you're starting to see it's hitting some targets, right? It's hitting some targets. Ooh, that's a smooth look. 20 pip play. Look at these targets that this market's moving with. All right, simple stuff to look at. Use your pullback pips indicator. Don't sleep on it. You could really minimize to maximize all the way. And as you're finding those plays, identify your bias, right? Now, what I want to do this week now is with this Sunday setups is let's look at some of these markets. Let's see what's happening, right? It's a new week, new setups. So the first thing is for those individuals on here, drop in the comments what you guys are looking at. I want to make sure that we're taking care of each and every one on here. So the first thing I want you guys to do now is now that you got your pullback pips, drop the comments what currency pairs you're looking at. I'm going to do that in a minute. Hold yourself accountable, right? By next week, you're going to ask yourself, am I trading the currency pairs that I identified I was going to trade today, right? So like, for example, me, I'm going to be trading my GBPs, right? So I'm going to put in, I'm going to be trading my GBPs. So I know I'm going to look at GU, GBP. I know I'm going to look at GBP USD. I got Euro GBP. I got GBP JPY, GBP CAD, right? Maybe I could drop it in the comments. Okay. I know I'm going to be looking at my USD because I like to trade some New York session, you know. So I'll look at maybe my USD CAD, my USD JPY, USD Swiss. USD Swiss. All right. So let's see what you guys got. Drop the comments. And as we drop them, I'm going to come over here to the watch list and I'm going to add them in so we can maximize this game time. The first thing I want you to do is I want you to realize whatever happened last week, right? It's a new week. It's a new setup. So the first thing we need to do is we need to grab the currency pairs that we're going to look at and we need to erase everything, right? Whatever happened, right? So let me just grab my pairs real quick. I said GU, Euro GBP, GBP JPY, right? I'm just adding them all to my watch list so it makes it easier. USD CAD, USD JPY, USD Swiss, AUD JPY, USD Swiss. All right, beautiful. Now we also had GBP Swiss, right? We had AUD JPY, perfect. AUD USD, beautiful. And AUD CAD, amazing. Oh man, don't get shy, guys. Hold yourself accountable. Drop them comments. I want to make sure everybody's on here. Make sure you guys can hear me. Make sure you guys can see me. So the first thing we want to do is let's start off and let's just go to our 2 hour, right? With all of these different pairs that we're looking at, let's just go in and let's make sure that we literally identify and remove everything, right? Like I was looking for this bad boy to go up. It broke. It did its thing, right? That was last week. Now we just got to keep going. All right. You see this trade setup? Oh my goodness. Right. Like you could admire your trade setups. I love that. Like this was a simple pullback pips play right here. It pulled back into the entry zone and boom, we sniped it to the downside. Right. Guess what? We got to remove it. It happened. So I want you to do that with each setup. Take everything off. Right? Because the setup, if we're going to find the play, if we're going to find this setup, it's going to look again and set up. So that's what we're doing today. Let me just delete everything. Some of these were some nice plays. Last week was great. This week is going to be phenomenal. It's a new week, new month. So I also want to make sure you guys are aware. Now, first Friday of the month, you know, we got to make sure we know what's going to happen. Let me just make sure if there's any crazy impact news. Wednesday. Oh man, Thursday. There's a lot of news this week. Make sure you know that it's there. All right. All right. Yes, Friday. Here we go. Here. Yeah, Friday. Right. Look what news event that we have this new month. NFP. It's going to be the USD impact, right? So realize this week's going to be a little choppy. Don't over leverage, please. We got news events that's going to impact. After this week, it's going to be amazing. So even if you're just getting started, use this week to practice, right? Because one thing I like to do is the first week of the new month, I like to let these news events go by because I know the market's going to be moving. It's a new week. It's a new month, right? A new candle is formed. So yeah, this is going to be nice this week. Take it slow, but it's going to look good. Oh, that was a nice play to the upside. All right, these things are looking good. All right, let me make sure. Family, drop it in the comments. Say it now, forever hold your peace. All right, we got NZD USD, NZD JPY, NZD Swiss. All right, it's gonna be amazing. I like this. So the first thing we always want to do is identify where is this market at, right? So let's start with GBP USD. Let me make sure all these erasings are, oh my goodness, a lot of these charts are looking good. Oh my gosh. Oh my gosh. All right. So the first thing we want to do, family, is let's go to our daily chart. Why? We want to see where this market is at currently, right? Whether if we're looking to buy this market, whether if we're looking to sell this market, we want to identify where is the market currently at on the daily, on the 4-hour, right? It's always key and important to see and truly identify where the market can potentially go, whether if that's to the upside, to the downside. Just some very basic, simple stuff, right? That's why when we're trading, we always like to target and reference structure of price because the market's not going to move 1,000 pips to the upside or 1,000 pips to the downside without it, hitting a specific area and pulling back, retracing. There was like, there's been 2 or 3 times that there's been crazy impact. The first one was not NFP. NFP was not even anything compared to elections, right? The first elections, right? And this recent elections wasn't too bad, but it wasn't as impactful as the prior elections. And then I think it was the GBPs, I think, when they were leaving the European Union, some crazy fundamental effect. So long story short is with this 4-hour in the daily, we want to make sure to identify some structure of where this market is at. See where it could potentially move to the upside, to the downside, right? The great thing is with our pullback pips indicator, we already have this structure that we can identify, right? So let's first go into some structure. Right? And as you can see, it's always key to just be able to identify that structure because those are always going to be reference targets of seeing what the market's going to do. You see, before the market becomes support, before the market becomes resistant, it is structured, right? And then from there, we'll be able to see and identify, is it going to be rejection? Is it going to be supportive? So look at GU right now, right? Looking at it at GU right now, what is confirmed? What do we know? Truly ask yourself, with whatever currency pair you're looking at, the first question, you go from the daily to the 4 hour to the 2 hour and stop at your 1 hour. And you ask yourself, what do you know? Right? And what I mean by that is, what is the reaction? What has the market done? Right? What's the most recent bias, in your opinion, that the market has moved from? Right? As you're looking at this chart, I'm seeing that this market already has been using this zone as a support, right? Not only this zone, but remember, it was a structure level. It was just a key level we identified, because if this is a support, we know that it's going to kick off and push to the upside. That was why last week we were able to catch this push to the upside. That's why we were selling EG, right? So we're seeing this, and as we're already identifying, we're already starting to break. We're already starting to break some of that restriction, right? So this is interesting because as it's reacting off of that, we have now interest areas and now targets of where we could push this market into. So for example, GBP USD, I like that it broke through that rejection, but what's even better now is I need to reference, where has there been prior rejection that could possibly serve as a support, right? Especially if I go on my pullback pips, let's see, are we bullish or bearish? We got to confirm that as well. Right? On the 1 hour, we are bullish, right? On the 2 hour, we are bullish. So guess what I'm going to be? Bullish on this setup. So whenever you're looking at a trade setup, you already notice that these structure levels, that's why it's already ingrained into this system, because I need to simplify this for you. If you already know where the structure is and you already know the type of setup that you're looking for, with this GBP USD is simple. Where can I pull back to? Where can I pull back to push this market to the downside? Right? This would be just great reference for now, but we got to realize, if the market wants to retrace and be a pain, we have two key areas of support that we got to look at. The first one is this area that recently broke. Like right now, the time is 9:44. I know that the GBPs are going to start kicking off at 2-3 o'clock in the morning, right? This is why it's important. If you guys are, although we know the bias, we need to trade at the right time. If we look at the breakdown right here, the time for GBP is not 10 p.m. We're looking at it, we're analyzing it, but best believe I'm executing at the right time, right? So don't get that confused. So as this market is marinating, doing its thing, for example, if it's 2 o'clock in the morning and the market has done this, it has just pulled back to one of these levels, right? Let's just say the market does one of these, right? And it just holds this area. And next thing you know, it starts to break out, right? Right? Let's say something like this happens. Right? If the market already reacts off of that zone, off of one of these retracements, now starts to consolidate, kicks up. Guess what? I'm looking for that entry to take that market to the upside, right? If I can get an optimal entry at one of these retracements within this zone, I could already minimize, my 30 pip stop and start pushing this market into targets, right? Smooth. Right? Now, aside from that, once it does decide to break out and push to the upside, you could definitely minimize and still maximize into your structure levels. And guess what? The R to R is always going to be above 3. It's going to be great, right? Catch your first entry where you could do even better. Easily, look at that, a 5-1. Smooth. So that's my play on GU. It's looking pretty good. Let it retrace, then react. EG. Now, EG should be doing the opposite. If I want my GU to push to the upside, I want my EG to go down, right? And this is just basic sense of looking at the market and understanding correlation. It's a GBP correlation. GBP USD, Euro GBP. They're in the opposite directions, right? So already looking at this example, that's why last week with this fall was amazing, because the market did what? It went low, it pulled back, it went lower. This identified the bias, the pullback opportunity, where you're now asking yourself, where did the market eventually break or pull back to? That was a nice retracement, right? Right? Some nice sweet spot areas of reference that we can use to push this market down. Now, seeing that it hits this area and drops, right? All of this supportive zone that we identify, it was one supportive, breaks through. Guess what? Now when it came back, it's going to be rejection, rejection, rejection. This is key, because as that market's pulling back, right? You're minimizing your risk, pushing that bad boy into structure, and now you got yourself a lethal setup, right? So seeing this bias, what do you think we can do? We can continue that market. So what I'm looking to do is, let's start with EG in the beginning. Look at your daily, and you got to ask yourself, well, where can it go? Well, clearly right now in this case, it has plenty of space to the upside. Let me see, where's the space to the downside on the daily? There's a little bit, but it looks like it's been in a consolidated state. That's fine, right? Let's go into our 4 hour, because we're always going from level to level, right? So for example, already if we just identify structure, right? Let me come over here, remove the background. If we identify just structure, you can see structure is the outer points of the market that we're seeing. So as we're identifying this structure, we're using these as potential areas that if we're looking to sell, we're pushing the market to the downside off of, right? So as you already can start to identify from your 4 hour daily to the 1 hour, right? You're seeing these levels, these areas that you're going to reference, right? So you can see right here, before a structure is anything, before a support is support, before a resistance is resistance, it's structure. The best thing we got is now a structure. What is that? Supportive, breaks, rejection. I like this zone. I like this area, right? If the market wants to pull back to that area, great. But you got to realize it already has broken now this area of interest, right? So it's pretty interesting, just because in the past, it looks like it was what? In the past, you got to just be able to fine tune stuff like that and see what's happening. Right here, we saw all of that rejection. It broke through. It was supportive, and now it broke through. So when support gets broken, just as we had over here, the support getting broken, we got to see if that's the pullback to react off of. So with EG, let's just see, is there any spot that we can reject off of? Aside from this, look at this wick. This wick is all hesitation. That's why I had this zone looking something like that, right? So let's look at this. We got this area of interest. We got this area, and then that rejection. Simple stuff. Looking good, right? It'll be optimal if it could just hold this area right here, this first zone. This zone right here. That's why I'm just being patient. I'm not executing right now. This is my interest to see what the market's doing around this time, right? But if the market holds this area, right, you don't need to have a stop loss above there. You already are reacting off of the first zone to push it to the downside, right? The key is always, hey, where can I get in to minimize my risk, right? Why would I have a 40 pip risk? Yes, you can have a 40 pip risk, but look at your R to R. It's not going to make sense. right? I like to have my R to R at least 3 to 1. That's why I love Enigma. Enigma is a powerhouse. Why? Because each setup is 3 to 1, right? The reward is 3 times the risk. What that means is easily you don't have to be 100%. You don't have to be 70%, 60%, 50%. You could be 40% successful with that type of system, which is not even that low. It's like 60, 70%, right? But that's a different story. Maximize. So that's why you got to say, if you're rejecting off of this first zone, off of this rejection area, you'll be able to easily cut that risk from 43 now to 20 to 16 to 15, right? Because you got to look at it like this. Look at it in this situation. If we're able to now get in right here, boom, and we have these structure areas of target, now our risk to reward is what? 6 to 1. That's amazing because optimizing on that and maximizing that push, right? Worst case scenario, we get stopped out at 16 pips, right? And we're still going to be able to evaluate what does the market want to do, right? That's why I said the first thing that we can do is definitely reject off of this area and push down. Worst case scenario, we get stopped out, but you're cutting your loss early at 17 pips. What this allows you to do is have a fresh mind and still see, what is this market doing? Worst case scenario, right? If it's still going to reject off of these areas to show you that rejection, well, still, guess what? Find that rejection, minimize your risk, right? And maximize that profit because you still got structure areas you're looking to target. And that's why I'd rather do optimize off your entry. Know why you're getting in, right? You know why you're getting in to minimize. And when you do get hit, you still are seeing the type of play and the bias is there. So right now, when it comes to our pullback pips, we are bearish. So look for those 2 bearish plays to maximize this bad boy and take it to the downside. This is Euro JPY. I mean, Euro GBP. Right? And all of these structures are already identified, right? So as you can see, when you go to your 1 hour, a lot of these 4-hour daily structure levels are already there, right? So you're going to notice if we can just simplify it, let's go to some of these pairs. We got GJ, all right? Right now, it looks like it's been a little ugly. It looks like the bias is saying we're bearish. So we got to be a little patient, but we do know this is testing. This has shown it's been rejection. It's testing resistance. This market could easily start pushing down to this level. This might be not a GBP thing right now. This might be a JPY thing, right? Because if you notice, the time is 10. Is it 10 already? Oh, it's about to be 10, where the JPY, it's game time for the JPY, right? So you got to understand when you're looking at some of these pairs, what's the JPY doing, right? Let me see, look at other JPYs. We got AJ, right? You see what it's starting to do? It's starting to look bearish. NJ, let me look at the last 3 candles, bearish. UJ, the last 3 candles were probably bearish. Not as much, right? It's a little choppy chop, but bias is all saying bearish. So be in mind what this market could potentially do. I like GJ. Let's look at it. For right now, it looks like we had this motion. We got these structure areas. But aside from that, it's rejected off of the 382. We got our 50 right here, right? So this is what I'm just looking at. Because right now it's definitely been consolidating, literally, boom, all of these hours, right? So let's go into it a little bit more, see what's happening. I know with my GBP, that's later on, right? GBP is going to start 2 in the morning, 3 in the morning. So I know right now my GJ can't be influenced by the GBP right now. So we got to be a little patient, see what this market wants to do. Keep in mind, we have just been consolidating between these areas, right? for right now, you're noticing, and this is, I probably wouldn't look at this right now to trade, just because since we're bearish, we got to respect that. Since we're bearish, let me see, what is that on the 2 hour or the 1 hour? We're bearish on the 2 hour. Let's see, we're still bearish on the 1 hour. So at the moment, guess what the bias is? Bearish. All right, so the setup is, how can I minimize my bearish setup? For me, I like to minimize. I'd rather come in this rejection and at least take it down into structure areas, right? That would be a setup that I would look at. The only problem is, realize once GBP kicks in, you got to see what the market's doing. If it's not making these plays that you're looking at, and you start seeing that the bullish power kicks in and the bias switches, you catch those pullbacks and you push it up. But for right now, I'm just showing you guys just some quick setups based off of this bias on GBP JPY, right? So first off, we have just, hey, if the market wants to break through this structure area, it's already rejecting, then it might continue to this next level. If not, it's just going to show support because it's just being a pain right now, and it's just consolidating. So it might just kick up here and reject. If you notice, with both cases, you're keeping your risk minimal. You know, you got a 20 pip in the first situation. You got about a 30 pip in the next situation. Keep those losses tight, right? Me personally, I don't like this as much just because it already has moved bearish for a while. Let's be honest, when you evaluate your trade setup, you got to ask yourself, has the market given you what you want it to do? For example, like the first play we had was the market creating this momentum. At that point, we identified we were bearish. So it pulled back and boom, went lower. That was already 130 pips. Guess what? Not only did it do that once, but then it pulled back again and then pushed down for 170 pips twice, right? So it's like, dang, if you missed out on those two good pushes, you got to realize the market does need some time to breathe and consolidate, right? So I'm keeping that in mind, though. All right. So I'm going to move into these. Oh, some of these aren't bad, right? I was going to start eliminating the currency pairs that don't look good, right? So give me 1 second because this one looks good. So I'm going to leave it alone. So when I look at a currency pair, what do I look for? I look for trend, right? I have already a system of what I look for. I make sure that the pullback pips is aligned. I make sure that it's a market that's potentially trending. I find a pullback, right? Because already systematically, psychologically, if you get in on a pullback, your chances are so much more profitable, right? Because it minimizes your risk, right? So for example, with this USD CAD, you can already start to see the market already has created momentum. It has pulled back and it has created momentum. Not only that, but by the looks of it, we have space, right? By the looks of it, we have space. So for example, with this USD CAD, I am looking to get in on it, see what it wants to do. It's not a trade setup I'm going to eliminate, right? So let's look at UJ. Is UJ trending, right? Has it shown momentum right now? From this high point to this low point, I call that some momentum. Yes, right? If you notice, it already has broken all of this supportive area. So if you can catch a pullback, would you be looking to sell that bad boy to the downside? Possibly, yes. We're going to leave that there. USWIS. Looking at USWIS. Has it shown the market potentially trending? Yes. Where you could catch a pullback and take it low. These pairs look good, right? Some of these pairs definitely look good. So this is the quick scan that you're going to always do. GBP Swiss. Right now, what has it done? Has it gone up? Has it pulled back and showed a rejection, a reaction off of an area that's key? That's a supportive structure, yes. Has it kicked back up and created momentum? Yes. Ooh, I like it. Why? Because if the pullback is telling us buy, right? Let me come over here to my 1 hour because I know that was the most recent flow of impulse we had, right? So since the pullback is telling us buy, we could definitely minimize to maximize. So we're keeping it, right? AJ, let's see. This one's actually not too bad either. This one's not too bad. It's a little choppy, right? But I might be able to, we might be able to do some stuff, some good plays. Okay, I like that 80 CAD. I'm gonna take NU away. It's already been moving too much, right? A lot of pips have been moved on NU. Yeah, same with NJ. Give me 1 second. And I could leave NZD Swiss. That one's actually not bad. We got some good momentum, pulled back momentum. What does it want to do next? All right. So let's continue. We got some good setups that we're keeping in mind. UCAD. So first and foremost, now that we got these charts identified, we could start to go in looking at where is this structure and what is the bias we're looking at, right? When it comes to this AUD CAD, it looks like we're bearish. So what I want to be able to do is, excuse me, is always identify my restriction, my rejection areas to where I could get in on this market to minimize my risk, maximize my profit, right? Simple stuff. Hopefully that makes sense. So these are my interest areas that I'm looking to get in, right? We already have our structure areas down here where we're looking to target, right? So you already know all of that makes sense. So if this is true, wouldn't it be effective to have my stop loss above that structure, above that rejection, above that trend line? Yes, right? It's all aligning, right? So like, for example, USD CAD, I'm going to make sure that I'm trading it during that USD CAD time. But based off of this, what I'm looking for is clearly some rejection off of this area so I could place my stop loss 30 pips minimal, right? Because I'm rejecting off of this area. I could have a 30 pip stop loss right above it, right? Because the key thing is if the market takes it out, it's going to want to do two things. If it creates a wick and rejects, well, I'll just have to re-enter. If it creates momentum and wants to break through, it's going to want to keep taking those highs. So I'm going to get out of that trade early, right? However, guess what? If that's the rejection area, we have some nice flow into target areas that we could push this market to the downside and continue, right? So this is not bad. If it pulls back to that specific area, we're looking at least target into our 161, which gives us some good stuff, some good plays to the downside, right? So that's USD CAD. Definitely looking to see the rejection off of these areas and pushing it to the downside. USDJPY. Now you got to be a little patient with this just because if you notice, it definitely created momentum, right? And the thing is, I talked about this USDJPY last week a little earlier. Let me show you guys where we were looking at this bad boy. I was looking at this off of this move, right? So I remember I was already right? Basic stuff. So when the market started creating this flow, boom, pulled back, pushed into the downside. I already had an idea. I'm looking for some bearish setups, right? Where can I get in to minimize my risk, maximize my profit, right? As this market started breaking these areas, right? Showing support, guess what? And now looking for it to be rejecting, right? We weren't able to get the best entry up top, but still catching some of that rejection. We're pushing this market down. Now, the only thing I don't like is it really hasn't given us true opportunity to identify the setup, right? Like, for example, like you see over here, it just went straight up. You had to really be very patient to really find those key entries, right? Because it just made some moves and kept going up. So Like, for example, let me see if I can find all right, like for example here. All right, it looks like UJ has been a little choppy, but like let's look at this example here. Perfect. Looking at this downtrend, it gives you time, right? You find the first pullback, you got some time. It creates the motion, so you're in that bearish setup, and you got time to catch the pullback, right? Looking for your areas of it to sweep and take it to the downside, right? So you're noticing, this is the most optimal trade setup that you want to see in a trending market, because you're finding those pullbacks, taking it to the downside as it's breaking, those supportive areas. Now, in the current situation right now, it just has taken the push to the downside, where if you could have gotten in, great. But right now you got to be a little patient, because it might pull back, right? The pullback might be a little bit more aggressive than we think. So we got to be a little patient. See, first off, I'm grabbing my wicks, drawing my pullback areas up here. This is where I'm looking to get in. If I can't get that entry, I'm not getting in, right? And then if this is the most recent structure, so it comes to 707. So that's not bad. If I can get in on this area, amazing, right? Right now, UJ doesn't look as good. It was this close to getting eliminated, but if I like it, because if we can at least find some rejection, this risk should be at least 20 pips. Look at that, 15 pips, and then we're easily going to push into the first level of structure, easily push into the next level of structure, and if it wants to make some moves, we got some good R to R on that, right? That's why I do like it. But I am making sure that at this time of the day, everything's aligning, from the fundamentals to the currency bias, right? Trading the right pair at the right time. USWIS. Now we got to notice USWIS has definitely been pushing up, 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 up. So you got to realize the most recent bias that we do got on USWIS is we're bearish. So we got to only look for this bearish setup and ask ourselves, where can we push it to? All right. So looking at it, you could already start to see we have momentum. It pulls back, momentum. It pulls back, momentum. So I do like it. As long as this market could continue trending to the downside, I'm looking for an entry right here, right in this zone between my 382 and my 618, right? And what you're going to notice is it's not breaking above this structure of price. So as long as the market could hold that structure of price, that's going to be our reference for our stop loss. All right, so if we can get in around this area, stop loss minimized, for us to maximize that push to the downside, right? Not only into our regular structure of price, but I like USWIS a lot more than UJ, because it's showing us the meat and potatoes and all that good stuff we need to push it down, and it looks great. Right? And that's telling me, and this is what I got to make sure. I got to make sure that the currency pair is intact. So what I mean by that is, if I'm looking at USD Swiss, I need to make sure that the USD, when I'm trading this, who's in control, the USD or the Swiss, right? I know there's USD news today, so that might push it a little bit, but still, where can I find this bias and who's in charge? For example, if I'm looking at the US dollar, I'm looking at the DXY, right? The US dollar currency. You remember in the beginning, I said, if you can control and tame the currency, you got the pairs, right? You can trade any pair that's based off that currency. So like, for example, I'll look at my US dollar, and if you notice, right, when I was buying my USD, it was because the DXY was just breaking these areas to the upside, right? So right now, looking at this DXY, what do you think is currently telling us right now, right? Like pullback pips does work on your currency pairs. I need to get some water. Sheesh, dropping too much sauce. But if you notice, we're bearish. If you notice, this DXY has shown me potential setup to look for some pullbacks and short, right? I'm dropping the keys. For the people who stayed on to the end, I appreciate you guys, because we're not done, but make sure that it all lines up for you guys. All right, so make sure you understand that this is USD Swiss. I like it. Let's find the pullback, short it. All right. GBP. Now remember, if you guys remember earlier, the GBPs are, I want to see that they're bullish, right? EG, I wanted to set up for the sell. GU, I wanted to set up for the buy, right? So with these types of setups, I want to see if the GBP gains strength, you got to identify that GBP Swiss is going to be bullish. And the good thing is we're going to be able to identify potential areas to minimize and maximize. This is going to be great. If we want to get in on GBP Swiss, I'm looking for it to have a rejection inside this zone and easily push into structure to the upside. You know where structure is, right? We're up top here, This is structure of price. So let's just look at this situation right here. Market takes out those lows. We place a stop loss under it for 30 pips. Our first target is structure. Boom. Once it breaks through, we could take it to the next level of structure. Does it make sense on my R to R? 5 to 1. I'm taking the trade setup, right? I'm looking for the rejection. Now, one thing I like is we do have the market that played off of this earlier this week. So why am I looking to place that entry below it? Let's take out those previous buyers, right? Who placed their stop losses there, right? Because the great thing is if we throw our fibs from the low to the high, this is right where the 50% is. This is where the 618 is. So give it some time, let it pull back. Look for your reaction, especially at what time? GBP time, 2 o'clock, 3 o'clock in the morning. And look, if you see that rejection reaction, take it, right? Push it up. So I like that GBP Swiss. AUD JPY. Now, looking at it right now on the pullback pips, I can't do much on it. So I got to leave it alone, honestly. It says we're bullish. I know right now looking at AUD JPY, we got crazy rejection here. We got crazy structured support there. It looks like it's a consolidated market. I got to leave it alone right now until I see something else. It might happen later on, right? But when we're dealing with consolidation, it's either going to do a break to the downside, retest that, and take out the next level of structure, or it's going to push to the upside, right? As it's breaking structure, it's either going to reject extremely hard, or if it breaks through it, it's going to attack the next level, right? We'll target it. So I got to leave AJ alone, honestly. AU, I do like AU though. So let's talk about AU. Because look, if the dollar goes down, that means anything that has a dollar in the front is going to drop. UJ, USwiss, UCAD, right? That's why we were bearish on those setups, if I'm not mistaken. Let me make sure. UCAD, we were selling, right? Yes. UJ, we're looking for the sell. Yes. USwiss, we're looking for the sell. Yes, right? So what that means is all of those dollar pairs, I'm looking for the buys to be selling as long as the dollar index shows me that, right? So that means anything that has the dollar in the back, right, such as AU, I'm looking for that to go the opposite way, up, right? So it aligns with the pullback pips. I like it because now my next question is, where can I minimize and maximize? Simple. Where can I get in for this market to continue going up, right? You see, it already has broken all of this area right here. This is all, look at that. Look at all that consolidation and hesitation, right? It's already broken through that. So now my next question is, where can I pull back to and eventually react in a positive manner, right? And continue to the upside, right? So with that case, I do like it because if I'm looking at this AU, I'm asking myself, is this market going to pull back, hit one of these sweet spots, give me a nice minimal risk of 30 pips, right? Honestly, if I'm entering off of this rejection, I don't even need my 30 pips. I'll have to do 20 because I don't want the market to come down here. I'm reacting off of this zone, this retracement area. If anything, I got my stop loss under the 50, I believe that was, right? But the great thing is I'll be able to target some nice areas of structure to the upside, right? Regardless, 20 pips, 30 pips, the R to R still lines up, right? As long as it's above 3, it's a good setup. It's still a great setup if it's, 2 to 1, but you got to be more accurate. The bigger the R to R, the less accurate you have to be. It's at 4. That means if all of my trade setups are at least minimum 4 to 1, I could be 30% accurate and still be profitable, right? So that was AU. AUD CAD, let's look at it. Ooh, I remember UCAD, we were looking for some shorts. I know AU is looking for some buys. AUD CAD in that case is a little choppy. It makes sense. I'm going to have to eliminate it right now. It doesn't look good. I'm going to leave it alone right now. I'm sorry. AUD CAD, no bueno. ZBP Swiss. Ooh. Now this right here, I know we're bullish, so this setup is only going to make sense if you can catch it perfect. And it's not that perfect, actually. You got this. You got this, right? This is actually pretty interesting because it's getting there. It's almost at the sweet spot. And I like it. I like this NZD Swiss. It's going to be interesting. We're currently bullish, right? Give me 1 second. We're currently bullish on this bad boy. So if you notice, I'm keeping my risk very minimal, identifying, hey, where can it retrace to, right? I want it to retrace and react off of this area. So it's literally a matter of, if you notice, it's going to have to retrace, react off of this area, kick up as we start pushing it to the upside to target some of these areas. Simple stuff, right? That's because we're bullish. Now, if we can catch that type of trade setup, we'll be able to have a minimal risk right below that, all of that structure, right? 20 pips. And I'm going to take it to my structure area. Now, does it make sense? Is it above 3? That's my question of the day. If it is, boom, that's a setup. So all of these trade setups look great. Now that I have them set up, my week is easily now more you just took so much pressure off your mind now knowing and setting up. Now you'll see, right? For every area we have a specific interest point, right? Let the market marinate now, right? If it doesn't come to that interest, you could use alerts, whatever type of things you want. You can use alerts. You could make sure that you got your timer set up, your alarm set up. You could use a trading view alert. So for example, if you want the market to let you know when it's right here, all you do is you set that price with a line or a horizontal level, and then all you got to do is set an alert to it. So you'll just right click and you can alert me, right? And this is what's smart about it. Not only just alert me once, alert me as many times as needed. So what I usually do is I do once per minute, right? Because if the market breaks through here, if the market breaks through this line right here, for example, if the market hits it, it's going to alert me, right? Now that it broke through, I'm looking at it and I'm asking myself, okay, what's happening there, right? So guess what? Once the market breaks through again to the downside, guess what it's going to do? It's going to alert me, right? So whenever the market breaks or hits that cross, you can set that type of alert. So you're starting to be a little bit more just saving your time rather than staring at the markets. You're already going to do that by trading the right pair at the right time, minimizing your risk, maximizing your profit. Each of these setups, you're going to notice, are all amazing R to R. Look at that, 5 to 1. The other one we had, this one right here, is a 6 to 1 trade setup. This right here is a 7 to 1 trade setup, right? So take some time, replay this. All setups look valid. All setups are making sense. If you have any questions, feel free and reach out. Everything so far is lethal. Look, all of my trade setups so far, all of these have been more than a 5 to 1. All right. All right. I'm still look at it, right? All of them so far have all been more than a 5 to 1. That one just, if it's not a 5-1, it's out of there. Oh, that's a 4-1. I like it. I'll leave it. All right. That's a 3. Okay. Long story short, 1, 2, 3, 4, 5, 6, 7 pairs were all 5-1. What that means is, imagine taking 7 trade setups, right? They all don't even need to be 100%. You'll still be lethal with it. So I appreciate you guys, family. Let's kick this market's butt. I hope you guys are holding yourself accountable when you have your inside your success manual. Hold yourself accountable, identify the trade setup, your confirmations, identify how you're feeling, and like I said, let's take on the markets. If you have any questions, I'll be inside our Discord community. And I'll see you guys on the next one. Appreciate it, and have an amazing night.